our Wealth Wednesday episode, we had 5 stocks that we were talking about for 2021 growth, and it got deleted. I'm so mad. So the entire stream, usually I post the stocks we were discussing, the information behind it, and literally Instagram deleted the whole thing. So going forward, that will never happen again. And that's why anyone that's watching me right now on my Instagram, I want you to click the link in my bio and hit up our YouTube, because we are live on there. And that is where this is going to be. All right. Because again, you have to be able to save your content. I am no longer interested in having Instagram be the end all be all for my content. And I think that's really important when we look at, content, period. You want to make sure that you are always considering owning your content. Because if you own your content and someone else is in control of it, you really don't have much say in when it gets saved, when it doesn't get saved, what happens to it. You really don't have any say in that whatsoever. So for me, that's kind of a lesson that I learned last week. And I apologize for all of you who were on last week and wanted to kind of rewatch that and weren't able to, that will never happen again. So for folks who just joined, hey, what's going on? I'm Bev. Sweet vibes. Nice to see you. Mash up the place 13. What's going on? Forever Miss Douglas, what's up? How you doing? For everyone who just joined, I want you to click on the link in my bio, head over to our YouTube station. That's where we're going to be showing content today, because again, last week I had 5 stocks and Instagram deleted it. So we talked about some things, and I guess we'll get into it right now. So let's get started. I'm going to share my screen on YouTube. So if you're not over there, please go click the link in my bio and head over there, please. And thank you. Let's go to window application. This one. I'm going to share my screen over there. All right, so that we don't want. So first and foremost, let's do a little bit of housekeeping. Our website, just in case you want to follow us online and kind of make sure that you're staying in the loop with us and where we are, it is called The Way, and spelt with an accent. All right, so if you're looking on the YouTube station right now, oh, it said it's not secure. I must have typed it wrong. www.accent.com. All right, so this is our website. And when you go to our website, you see the way that it's spelled up here, theway.com. And you will see, hey, everybody that joined up, what's going on, folks? I want you guys to click the link in my bio and head over to YouTube. I'm going to have some content over there. Like, I'm doing the simulcast. So we're going to be showing you guys some actual stocks, the actual charts. I'm going to go over everything right now. So if you're listening to me on this, that's great. But if you want to see the charts and all that other stuff, just go to my link in the bio and you'll follow me on here. So both are going at the same time. All right. So this is where you will find our live streams. All right. Let me make sure that I publish the site so it can show exactly what I want you to see. So every Wednesday at 8 o'clock, just hit up our website and you'll literally see our live streams right on there. You can click the play button and you'll be right into this. Because again, the purpose of this is we want to make sure that folks actually move into our content space so that we can kind of control the content. Last week, I mentioned before, YouTube literally deleted Instagram deleted my video, and we were talking about 5 stocks picks for 2021 that are going to be growth stocks. So I just don't want that to happen again to you guys. So going forward, just hit over there and you'll be able to catch us. Okay. All right. So let's get into our content. The first thing that I want to show you is our 5 stocks from last week. So the 5 stocks that we looked at last week that are designed for growth are JMIA, Jamia. Hey, Miss Douglas. Toronto Shay, what's up? JMIA, JetBlue, Amex, NEO, and TLRY. Okay? Those are the companies that we decided to look at. Now, the reason why we decided to look at those companies was because they were primed for growth, and we discussed what Jamia was doing back in 2019, 2020, when it first came online, and after it was IPO'd, the drop that it had, a devastating drop, and how it's grown since then. So, for me, it's really important that when we look at, any stock, it doesn't matter where it is, it's important that we have an understanding of the story of the stock. And that's something that is important for you to understand. Every stock has a story. It's important for you to know what that story is so that you can make wise decisions based on that story. So Jamia was the first one. The second one was JetBlue. And we discussed why JetBlue was a good stock because, again, in the pandemic, folks can't travel. So when you can't travel, airlines can't fly. If airlines can't fly, they can't make money. So it's really important for airline companies to have flights. So as the pandemic rolls through and we're actually on the other side of it, it'll be very easy for airlines to make money and make revenue. Right now, their flights are low. Marici, what's going on? Nice to see you. Trendsetter, nice to see you. All right, so it's really difficult for them to make money right now. But when the pandemic is over, when the vaccine comes out, when everyone is actually flying again like usual, it's going to be very easy for them to make that revenue. So right now, the stock price for them is going a little bit lower than it should. So as a matter of fact, let's go look at our graph. So for folks who are joining me on Instagram, go to my bio, click the link there, and you're going to see the live YouTube stream. And I want you to go over there because that's where we're going to be showing you the actual content. We're going to be showing you the exact websites. We're going to be showing you the actual prices. I'll install that later. Try later tonight. We're going to go through Yahoo Finance and just kind of walk through the stock with you so you can kind of see exactly what I'm seeing. All right. So I'm pulling up JetBlue right now. And again, this is just a recap of last week because, again, it was deleted off of Instagram. So I want to make sure that we went back and touched on all of these. So if you see on our YouTube channel, you'll see the JetBlue stock. And I'm going to pull up the 5-year chart. Actually, I'm going to pull up the 1-year chart. All right. So JetBlue had a high back in February 13th of $21.56. Okay. And after the pandemic struck and everyone was actually sent home and the flights were not able to fly, their price dropped from $20 down all the way to bottoming out at $6.86, right? And again, that was at the height of the pandemic. So since then, those share prices that dropped all the way to $6.86 have risen from $6 to $14. So if you were able to have that wisdom to say, I'm going to invest in a stock right now, even though there's a pandemic, even though things are going bad, I'm going to invest in a stock that's going to grow over time, you could have done this. Now, JetBlue still has room to grow. So that's why we decided to look at this stock as a growth stock for 2021, because the vaccines are being rolled out right now. Economies are going to be opening back up in the next 3-4 months. And by the time that happens, again, after holiday season is over, people are going to fly. They're going to have cabin fever and want to go places, especially when the summertime hits. And you want to be in this stock before that happens, because if you are, you can capitalize on that gain. So that's why JetBlue was in here. All right. So again, from a low, again, if you had the foresight to know that this pandemic was going to solve itself, you would have been able to invest in that at, $7, $6, or anywhere on the way down, and just know that it's going to make its money back. Now, a quick strategy that I'll give you guys, and part of this, there's a lot of folks in here that know how to make money. A lot of folks are listening to us that invest in stocks right now. And the difference between what they're going to tell you and what I'm going to tell you is this. Not everyone makes money in stocks if they don't have an actual strategy, depending on which direction the market's traveling. So the market's traveling down. Like, let's say you had JetBlue stock and you owned it, and you had, let's say 100 shares at $21, right? So that's $2,000 roughly in JetBlue stock. You saw your $2,000 drop from $2,000 all the way to $900 to $700, right? Like literally your stock dropped in half if you own JetBlue stock before the pandemic hit. Now, if you know the company is solid and that they're going to find a way through it and that we're going to find a way through it, you need to double down on that investment. So on a JetBlue example, right? So the stock went from $21 down to $7. If you own that stock and you saw your stock dropped by three times its value, you need to buy more shares. Very simple. And the reason why this is a strategy that you need to know is because when you have a stock price that drops by 3 times its value, your net share value is now so diminished that the only way that you can make a profit off of those stocks is if you kind of dump more money into the stock if you know that long-term the stock is going to rebound. Now, that's kind of a risk if you don't think the stock's going to rebound. But most times and all times, stocks usually rebound. And we can't rely on past performance for future results, which is what they say in the investment game. But a company that's solid, as long as it doesn't go bankrupt and it has a proper balance sheet, has proper operations, you've flown it before, you realize that it's a good company, those companies you need to invest deeper in if you already have them as a stock in your portfolio. All right. So strategy number 1 is if you're in a stock and there is a pandemic or there's something that's happening where you need to, look at the value of your portfolio and it's dropping because, again, something outside of your company's control. JetBlue couldn't control the pandemic. JetBlue couldn't control COVID-19, right? They couldn't control people not wanting to leave because they're quarantining in their homes. They couldn't control any of that. But airlines is an essential service. People need to fly for work. People need to fly for games. NFL athletes, they don't take buses, they take planes. Folks who do international travel and international business, they take planes. So you have to kind of look at that. If it's an essential service, right? They're going to get back and running when the country gets back up and running and when the world gets back up and running. They're going to continue flying because they're an essential service. Invest when the price is low, especially if you had the stock. So for all of those JetBlue stock owners who had that stock when it was $21, I want you to make it a point to buy more of those shares right now, because as JetBlue increases over time, your values will come back. And as soon as JetBlue hits its previous high where you originally had it before the pandemic drop, which was $21, if you were buying shares while it was down and kind of climbing back up, you're going to make way more money than you would if you just sat tight and did nothing. Because remember, you're buying shares at a low of $7, at a low of $8, at a low of $9, $10, $11. You're buying them along the way. When it gets back up to 21, you've just made $9 on each share, right? So this is one way that I've used to kind of earn back my money if I've lost money in the market. As long as I'm invested in a good company, it's going to work. Okay, so these are the kind of strategies that I want to talk to you about as a person who invests his money, as a person who has invested professionally, still invests professionally. Like, you have to know these tricks, because when the market goes down, that doesn't mean that you're out of the game. Okay, especially if you're dealing with growth stocks. The idea of a growth stock, and then we'll go back to the basics. A growth stock is a stock that's value is going to increase over time, and that's what you're banking on. You're not banking on dividends. You're not banking on, some type of income stream coming from the stock. No, you're banking on straight value of the stock going up over time. Perfect example of that is Tesla, right? When Tesla came out originally, let's pull up Tesla's stock. If you're not with me, if you're with me on Instagram right now, I want you to click on the link in my bio and go to our YouTube live, because I'm actually showing some stock charts of YouTube. I'm showing some stock charts of it. So if you are, able to do that, just click out, go to my profile, click on the link and you'll see our live stream. So Tesla, when it first came out, oh my goodness, let's look here. So this is kind of a weird chart, but we're going to use it anyway. Let's max up. Okay, back in July of 2010, $4.77, right? That's Tesla stock. That's what it's valued at, right? So in June 1st of 2010, you could have bought a share of Tesla for $4.77. Okay. Now, Tesla shares are worth $622. That's a growth stock. A stock that you buy in the beginning and you hold it for 10 years. If you've held Tesla for 10 years, you deserve to have your $4 stock grow to $622. That's what a growth stock does. It does not give you dividends along the way. It doesn't give you extra income every single year, but it gives you the opportunity to make a ton of money if the company is successful. And let's get into, so that was JetBlue, Tesla. So we're going to get into our second 5 stocks for this week. So the first 5, again, if for those who just joined me, were Jumia, JMIA, JetBlue, Amex, NEO, and Tilray, TLRY. Those are the 5 stocks that we talked about last week that are going to be primed for growth in 2021. If you don't know them, just, look them up. I'll give you the sticker symbols and you can just look them up. Okay, so JMIA, JetBlue is JTBL, I think. JBLU is JetBlue. Okay, I'm going to write that in my notes so I can just have it ready. Amex is AMX. All right, American Express is AXP. Let me change that up. American Express is AXP. I'm writing these all in so I can have them all there. NEO is NIO. All right, NEO Limited. And the last one was Tilray, TLRY. Okay, so those are first 5 stocks. So for those who weren't with us last week, those are the first 5 stocks. Look up their ticker symbols if you need to. JMIA, JBLU, AXP, NIO, TLRY. All right. Now, for the next 5 for this week, we're going to go into the stocks for 2021 growth. And again, for folks who don't know, my name is Banaj. I am a co-founder of The Way. The Way is a nonprofit that is designed to give information to our community, our village, in the areas of financial literacy, relationships, and relationships and philanthropy. So those are the 3 areas that we work in. And actually, just to plug this, we recently put up a video of philanthropy with one of the famous B-boys, Crazy Legs. If you guys don't know who that is, he is a famous B-boy who I met during Puerto Rico Relief. He's been a very cool dude for us, and he's helped us in so many different ways. We had an interview with him back in August that we just recently posted on our YouTube channel. So if you haven't subscribed to us, please go on there, subscribe. Look at that video. He talks about how he got into philanthropy. He talks about what he's currently doing, and especially with the fact that, breaking is now a part of the Olympics. He has a lot to say about that too, so but we didn't talk about that part, but going forward, we're definitely going to talk about that. I'm going to have our producer pin those in the link. So producer Bay, JMIA, JBLU, AXP, NIO, TLRY. All right, those are all of the codes, and we'll go over them again if you guys need to hear that. All right, so anyway, so check it out, and we have the podcast. If you can't listen to that, just go to our website, and you'll see the podcast up as well. All right, so for the next 5 that we're going to go into, all right, and this is going to be the next 5 growth stocks for 2021 growth. Again, the purpose of this is for you to start building a portfolio of growth stocks that are going to gain you income over the next long haul. I don't invest short term unless I'm doing some sort of short sale or I'm doing some type of swing trade, which, again, a short sale is when you're kind of like shorting. So something's going to go down. You're like, hey, I bet it's going to go down, and you kind of make the money as it goes down. Swing trading is like if you know that a stock's going to jump in the next 2 or 3 days, even 4 days. Swing trade doesn't really have a limit, but it's not a day thing. It happens like either, if I do a swing trade, it can pop in 4 days or 3 days or 5 days, but it's not a long-term investment. We're not doing those right now. We're talking about stocks that I want you to own in your portfolio so that when you diversify with these 10 stocks over the next, 10, 15 years, you're going to see a few of them fly. You're going to see a few of them just grow incrementally, but most of them will grow, hopefully. We can't guarantee it, but based on what I'm seeing, I'm betting on them. So, if you want to join me and bet on them too, hey, you're going to be in good company. All right, so the next stock that we're going to look at, and this is a common stock, most of you know this stock, and that is Apple, AAPL. How many of you have Apple stock right now? How many of you own Apple stock? The reason why I'm going to ask that is because Apple stock is been growing pretty consistently for quite some time, and their business model is pretty much really tight. If you look at iPhone sales, if you look at MacBooks, if you look at the way that the technology works, iPhones are one of the most secure devices that you can own. And one of the things that makes it so secure is the fact that it has the software and the hardware. Both are created and designed by the same company. So they're able to create a much safer piece of equipment. And that to me has always been a pretty useful thing for me. I'm coming from a background of owning BlackBerry and owning other like really secure type of phones. And it's really important that, we look at that as a business model. Like people that have iPhones, they love the cross-platform ability. Like right now, I'm using my iPhone, I'm using my MacBook Pro, and together, I'm able to literally seamlessly do things. I'm literally putting in notes in my MacBook that are showing up on my phone. So the ability to do that with Apple has been one of its major, wins, and they came out with a cheaper iPhone. So they're just continuously making and improving their product, right? So Apple, and let's look at their stock price. If you're on our YouTube, you'll see this. So let's go back 5 years, because again, we're doing growth stocks. We're not doing anything that's going to be, we're in and out. Like this is just a growth stock. You buy it, you hold it, you keep going. So 5 years ago, Apple stock, January 25th, 2016, you could have bought one share of Apple stock for $24.33. Now, granted, this stock has split a few times, so these prices aren't actually what they were back then, but the ratio is the same. So bear with that. But you could have bought that share for $24 respectively, right? And that was 4 years ago. Look and behold, Apple stocks are now worth $127. So you're talking $24 up to $127, right? Steady growth. And if you look at the chart, it looks like a steady wave just moving slowly up, and then spiking even higher. Apple stock, and if you look at their numbers, look at what the performance outlook says on here. If you look at this chart, this is on Yahoo Finance. You scroll down here and you look at this performance outlook, right? Short term, positive. Middle term, positive. Long term, steady. So these are the kinds of stocks that literally hem up the bottom of your portfolio if you have them. You want to have stocks that are going to grow exponentially. You want to have stocks that are going to grow consistently, and companies that are large and huge. Most of the mutual funds that you'll buy will have a stake in Apple shares. Just look at any of them. You can pull up American Funds Growth Fund. You can look up, Franklin Templeton Growth Fund. These are all, mutual fund companies that put together these portfolios with growth stocks in them. I guarantee you that almost 99% of them will have Apple stock in them. And as a matter of fact, let's go and look. Let's see how accurate I am, right? American Funds Growth Fund of America. We're gonna look this up right live on our stuff. So if this isn't in here, hey, we're gonna keep it real, right? So we're looking it up. If you're on my thing, you'll see returns, risk prices, You're gonna see the stocks. What is in this portfolio? I'm gonna maximize this window. I want to see what's in the portfolio. They don't have any Apple. Look at that. Interesting. So it looks like I'm wrong. So they have Tesla, they have Facebook, they have Netflix, Amazon, Microsoft, Alphabet Company, but they don't have any Apple. Let me see if I can go deeper into this and see if they actually have any of that. That's interesting. So they don't even see Apple as a growth stock? That's weird. So if you look at that, isn't that weird to me? That's weird to me. How is this chart not a growth stock? From $4 to 127 bucks. You know what I mean? Like, that's just crazy to me, unless that's why. So the reason why they don't consider it a growth stock is because it has dividend. They put it in a different category. So this would be considered under the income fund for this company, which is fine. Again, to me, if your stock is going to grow by just stock value and it's going to have a dividend, that's a growth stock with a bonus, if you want to look at it that way. That's like a growth stock on steroids. So let me go into their income fund and see if it's actually in there. So guys, American Funds is a very interesting, they're a pretty good mutual fund company. Their fees are extremely low. So a lot of investment advisors will recommend them, because when you invest with American Funds, you get very cheap costs of expense ratios. Like if you look here, expense ratio is 0.64%, which is very low. Some mutual funds, the expense ratios range from $1.50, 1.5%, 2%. Some are really high, even as high as 3 or 4%. American Funds are usually very low. The only one that's lower than them is Vanguard. So, that's just why people would be all over this. But I want to look up, view a different fund. I'm going to look for their income fund. So you see how, okay, so mutual funds are broken up into different ways. And we're kind of going off tangent here, but I don't mind, because if you're following me, you're going to learn some stuff while we're showing you some stuff, right? So mutual funds are broken up into these areas. So they have growth funds, growth and income, tax exempt, equity income, balanced, retirement income portfolio. So they break them up into different, categories based on what your needs are. So I want to go to the income section, growth and income, American Funds Development, American Funds Mutual Fund, growth and income. Where's your income fund, buddy? All right, we're going to go to just the American Funds, equity income fund of America. Here we go. We're going to look at this. And I want to see if Apple is in this one, because again, we just saw that Apple does have a dividend. So that would make it an income bearing stock. And it is not in there in one of their top equities. Okay. That's interesting. And this is okay. So just to point this out, so I'm looking for Apple as an investment in a mutual fund, right? And this is why I like creating my own investments and putting together my own portfolios, because if I look at Apple's track record, right? Not only are they great with dividends, not only are they great with stock price, but they're a very well-run company. Why the hell wouldn't I want them in my investment portfolio? So to me, that's kind of why I feel like we have to start creating our own portfolios, because if we expect these fund advisors to put in stocks that are going to actually make money the way that we want to make money, like I want a stock that goes from $4 to 127. Like I want that personally. I mean, that makes more sense to me than a company that's going to just slowly roll. Like, look at this, $24 to 127. I'm good with that. If you give me that in 4 years, I'm good with that. So we're going to create our own portfolio because it looks like it's going to probably do better than American funds right now. All right, so that is the first one that we're talking about, Apple. The next company on our list of 5 is, I'm going to just pull it up. If you're on Instagram, you got to go into my bio. We have the link for YouTube Live right now, and I'm showing some of the stocks on there, but you can follow me here too. So we're simulcasting, and this is what we do now. I was saying that last week, our first 5 stocks, the episode that we had was deleted by Instagram, and I don't know why. I mean, we're just trying to give people information, but they wouldn't let me save it. I couldn't post it, so you don't even see it. So going forward, I'm going to have it recorded on YouTube. That way, no matter what happens, our content is secure. All right. So the next one that we're going to look at is Tesla. That is stock number 2 for today. All right. And why is Tesla the next stock that we're going to look at for growth in 2021? Tesla has been doing some pretty amazing things when it comes to getting out that Model 3. But they're going to be doing some stuff in the future that really is going to exponentially grow their market. And here's the story behind Tesla and why I think that it's a good bet. Even though the stock price is $622 right now, I still think it's a good investment just because of the way that they're moving, right? So Tesla is into electronic vehicles, obviously, solar panels, solar batteries. They're slowly going to be rolling that out. And they also have a Tesla Semi. Now, here's the key to the Tesla Semi that I think is going to definitely be groundbreaking for a lot of folks. When you look at the cost of owning a tractor trailer, right? It's pretty expensive. I know a few truck drivers, and if anyone that's on here that's a truck driver, you could probably speak to this. Those trucks range from $250,000 to about $500,000 in value. Like, that's just the cost of a truck. If you want to buy a used truck, you're not going to get one for cheaper than $100,000, and you have to probably fix that thing up. It's going to cost you probably another $100,000 just to fix the parts up. I mean, it's a very interesting industry. The industry has a lot of waste in it. You know, trucking is a very wasteful industry because the machines are outdated. The logistics of those machines are very old. So when those parts break down, you're spending $75,000 for certain engine parts. You're spending $50,000 for whatever. You're spending a lot of money on parts. With the Tesla Semi, that thing has got batteries, wheels, and a computer. So when you think about what can go wrong, it's going to be mostly electronic things. If the hits a deer or something, or, you're going to probably have to do some panel work. But aside of that, the cost of owning a Tesla Semi is going to be cheaper year over year than the cost of owning a regular semi truck. And once companies start figuring this out and they start saying, hey, like Walmart, for example, they do a lot of, transportation via truck. They have a very good logistics system. Amazon is considering doing something like this as well, where they're going to get a bunch of EVs to deliver their goods, their Amazon products. Companies that are doing this and are getting into this EV system, they're going to cut cost for a lot of people. If you own a large consumer company and you need to logistically use a truck to transport back and forth, if you own a Tesla Semi or you're partnered with a logistics company that owns that Semi, your cost of transportation is going to be much cheaper long term. So you can literally make a ton of money if you're a logistic company by just owning that truck. So they're going to be selling the hell out of that. And I think that, along with their launch of the Tesla roof, the solar roof, that the batteries, and especially with Joe Biden going into office, a lot of these green technologies are going to now start becoming a thing. And I feel like based on that alone, Tesla stock is going to bounce. It's going to continue to go up. So right now it's $622. But again, if we go back a year ago, it was $80. And again, this stock had a stock split as well. So these aren't the actual prices that they are right now. Tesla was going through the roof, I think about $2,000, and they had a stock a reverse split, and they went down to like $500 just because, again, no one's buying in at 2,000. So companies do that when they grow. And then this is a perfect example. Let's say you own 10 shares of Tesla stock, right? It went up to $2,000, $2,100, and then they did a reverse. And they said, okay, if you own 1 share of Tesla, we're going to cut it into 3 pieces. So if you owned 1 share, now you own 1 times 3 shares. So you own 3 shares now. So if you had 10 shares, now you have 30 shares at the lower price at $600. So essentially, they're allowing your stock to continue growing just because the company is doing so well, because they want people to be priced in and to folks to buy into their stock. I'm not going to buy a Tesla stock at $2,000, but I'd buy a couple at 600, So I think that's how people kind of work. And there's like a mental piece for that as well. So Tesla did that. And I think going forward, I am going to continue to bank on the fact that Elon Musk and Tesla are going to continue to make EVs. And here's the backstop to this. And this is why when you're talking about investing stocks, you got to look at the backstory as well. Let me check the time. Okay, 30 minutes. Tesla's worst case scenario, right, is that they are still going to have a network of solar charging stations across the nation, across many different countries, even if their cars aren't the one being charged at those stations. You see what they did? So they literally created a electronic, like Tesla charging stations across the nation, a network of Tesla charging stations, so that any EV developer can charge their vehicles at their stations. It's essentially the equivalent of Sunoco saying, we're going to buy every gas station throughout the country. Someone that drives a car is going to have to stop at our gas station. So at worst case scenario, all of these EV manufacturers and companies are coming out. Lamborghini's coming on with an EV. Volkswagen's got an EV. Lexus got an EV. Everybody's got EVs, right? Tesla has all of the stations, all of the charging stations across the nation for you to be able to travel your EV across the country. They own them all. And you can charge your EV at that station for a small fee. And now these EV stations are run on solar power, so there's really no overhead. It's just a matter of them giving you power, and they're going to charge you for that because you're not a Tesla owner. Owners of Teslas get to charge their cars for free. Everybody else has to pay a fee. You see what they did? So they're tying in their bottom line as they do what they're doing. And that type of logic and intelligence is why I'm saying that I feel like they're primed for a great run in 2021. And again, this is what we're looking for. Companies that have a bottom line that's going to make revenue regardless. They have new products coming in the market that are going to make revenue regardless. And they also have the ability to continue to sell vehicles. Those Model 3s are very inexpensive and you're able to get an EV. And now look at the laws. In California, there is a law that says that you have to have, there's no gas vehicles allowed after, I think it's 2030, or I think that's the year, but correct me if I'm wrong. If that goes into play, who are you buying cars from? All you California folks who live in Cali, which EV vehicle do you want to purchase, right? That's how it's going to work. So you're going to have to look at it and say, well, I want to purchase an EV that's going to cost me the least amount of money. And if I think about what's going to cost me the least amount, at least I know I can charge my vehicle at a Tesla station for free. And I think that could be a major play. Epic lows and the peak of the pandemic. So I'm going right over the comments right now. I kind of was rolling and I wasn't really looking at these. So let me go back through and see if we have any comments. I'm gonna take off this jacket too, because it's kind of hot in here. Well, it's not really hot in here. It's just that my jacket is very warm. So we don't really need this right now. We home. All right. So I'm gonna go through these comments real quick. See what we got here. Top stop picture 21. Yep. I will pin that comment. Sorry. Pin comment. Okay. I think this. Okay, Johnny boy, I see that. JP, what's going on? Just going through any sort of comments. Make sure I didn't miss anything. Will you discuss Tilray? Yeah. Okay. So Forever Miss Douglas. Yeah. So that merger again, and we talked about the stock last week, right? TLRY again. When you see companies that are merging or buying other companies or just having some sort of acquisition, that is a good sign, especially in a down market. When you have a market like this where there's a lot of fear because of COVID, there's a lot of things happening at the same time, you want to have companies that are being aggressive. And we're going to talk about that market in a second. So just hang on to that. We're going to talk about that merger in a little bit. What's going on, Adam? Teresa, what's up? We had a few folks coming through here. Oh, what's going on? Man, Dark Chocolate, what's up? Bad producer extraordinaire. That's right, she is. Nelly Yuki, what's going on? All right, so you guys posted that for me. I appreciate that. Chevy, what up? Oddless, how you doing? Okay, everyone, if you just joined us, go over to the link in my bio and head over to our YouTube. We have all of the stock picks on there, and I'm showing screens as well. So if you want to take a look at what we're looking at, head over there. They joined the S&P on Monday. Yeah, so we have Tesla charger in our garage. Previous homeowner had one. Janelle, yeah, I mean, listen, you're hooked up. So Hack, by 2030, okay, sorry, Ben, in 2035 in Cali. All right, so 2035 in Cali, gas vehicles are no more, right? So again, California, New York, these states are states that are very progressive and they do things before others. So chances are you might see this happen in other states as well, but getting ahead of it, knowing that this company is going to be primed to have EVs or have charging stations, like Tesla's just a win. All right. So the next company we're going to talk about after Tesla now is Sunrun. Ticker symbol RUN. Let's look them up. So RUN, Sunrun Inc. All right. And I want you to look at this stock chart, and we're going to go back 1 year, 5 years. Let's go back 1 year. Okay. So if you're on our YouTube channel, you're going to see that this stock chart for Sunrun, 5 years ago, actually, no, I'm not going to go back 5 years ago. December 20th, 2019. I can only go back a year. Okay. Sunrun was out at $14.37. Okay. This is exactly a year ago. Today is the 16th, 17th. So 1 year ago, they were worth $14.37. All right. Since then, they kind of just had a very steady, slow, had a little drop at the pandemic, but they didn't really drop that far. Okay. They went down from a high of $22. They dropped down to $11. So that's about half. Okay. And then from there, they bottomed out at $9 in March 19th of 2020. So most companies usually kind of bottomed out during the middle of the pandemic beginning, right? So in February, March, most of them bottomed out. So this was bottomed out at $9. Since then, though, they have had a very steady growth rate going from $9 in March to August, $46 to they had a spike in October 5th of $78. Then they had a drop down to 54, and now they're at 61. Okay. The reason why I looked at this company and why they stood out to me was because when I looked up the news of Sunrun, they're the largest rooftop solar company, right? And we're staying in the idea of, with the Joe Biden administration, what's going to happen with EVs, what's going to happen with solar technology, solar, anything, right? Solar companies. They're going to get a boon because there's going to be tax breaks for folks getting solar on their roof. And there's going to be incentives for folks to do solar. So this is the largest solar company, and they recently purchased their rival, Vivint. They bought them last month, and I want to show you what that does. And this is, again, why we talk about this in a very strategic way. When a company buys another company, what it does to the stock price is that it levels it out. And it levels it out not because of just the money that's being spent, but because the speculation on that purchase. So Sunrun bought another company last month, right? Their stock price was spiking at November 24th. It was spiking up to $66. They bought this company. News came out. Stock price dropped from 66 down to 57, right? Literally in a week. That will happen. When that happens, though, it's important for you to start looking at it and saying, does this merger help this company or hurt this company? Simple. If the merger helps, buy more shares. If the merger hurts, wait. Simple. This merger helps them because now they have more market share. And in an economy that's going to be moving into solar, and I told you guys last week that even in certain neighborhoods in New York City, there is money set aside for folks to do solar renovations on current brownstones, high-rise buildings in the city of New York. That's going to keep happening across the country. And a company like this, who's used to putting solar panels on homes, they're going to make a killing because they can then service those solar panel needs, right? So I am going to look at a company like this because, again, it's had a pretty good run for the last year, but they're also primed to take off based on this new administration over the next 4 years. So Sunrun, RUN, is the stock symbol for that one. Take a look at them. All right. The next company that we're going to look at, and we're kind of speeding through here, is Lspd Lightspeed. Who's heard of these guys before? Lspd. Let's take a look. Lightspeed, and we're going to go back 1 year. We'll go back 5 years. Okay, we'll go back 1 year. Okay. All right. So September of 2020. We can't even go back a year. The furthest back it goes is September of this year. Okay. And that's annoying because I'd love to have more data for you, but that's all we got. Their short term is a down chart. If you see in our thing here, it says there's 2 to 6 weeks. The short term is a negative. Middle term, 5 weeks to 9 months is a positive, and long term it's sideways. Again, a company like this, if they're saying that short term the price is going to be going down, buying opportunity. And the reason why Lightspeed and why I liked and even brought them up in the first place is because they also had an acquisition, which required them spending money, similar to Sunrun. And like I told you before, anytime companies are spending money, it creates a speculation in the market. And when that happens, it forces investors to say, hey, I want to take a second look at this, because these companies are adding debt to their portfolio. That doesn't help every company, right? So when that happens, investors kind of take a backseat and say, okay, let me just wait and see what this company is going to do over that time, because I don't trust that they're going to spend their money wisely, maybe, or let me just hedge my bet in the event that it goes down. I don't want to lose any money, right? They do that. So that purchase happened. Their stock price has been level since that purchase. And that's what you'll see. Anytime a company buys another company, it's going to level out their stock price for a month, maybe 30 days, 40 days, until the market cycle runs those news articles and talks about the merger, talks about what their plans are going forward. People can assess the risk and then choose if they want to buy and go in. So this is a very good time to accumulate funds or accumulate stocks. Whenever they're in that little that lateral move, you want to buy in that mode, because after that it pops. So this company I'm pretty interested in. And if you want to go on your Apple apps, for most of you who have iPhones, the Stocks app is really good at this. You can literally load this stock up, load up Lightspeed and just take a look at the news articles. Take a read and see what's happening with that company. I think it's really important that you understand the nature of your investments and you're following the news cycle of those investments, because it'll tell you whether or not to buy more shares or to just hold. And that's the key. Like, you need to know when you want to buy and not buy. And I think if the company's saying we're buying this company, we're merging, we're acquiring these assets, we're looking at, cutting expenses, whatever have you, those are good indicators. Jemai did that same stuff back in February this year, and they went from, $2 to what, 30 something. So like, companies tell you what they're doing. They're saying, hey, we're shutting down operations in other countries because they're not profitable, so that we can focus on the areas that are making us money to give us more revenue. When a company says that in their news articles, that's your indicator to say this company is now cutting the waste, cutting off those areas of their portfolio that don't make sense, getting more efficient. Okay, this is my time to accumulate more shares, because if this thing happens and it pops off the way that they're suggesting, they're going to make a lot of revenue. Folks are going to come in, institutional investors will come in, and price jumps, right? So you want to kind of look at the news articles that are on your map to see what's going on. All right, so this is the fourth. So we have Apple, Tesla, RUN, Lightspeed, and the last one for 2021 growth is ticker symbol TAN. For folks who are following us on this, you will see what I'm pulling up. ETF. And we're going to look out a year. Look at that chart. And you can kind of start seeing, you see a trend. For those who aren't following on here, you can see the trend. If you look at the chart by itself, this is a year ago, okay? This is what a growth stock looks like. You've seen all the charts if you've been following us on YouTube. If you haven't, go back, just rewind the video, go back, and you'll see. All of the charts look the freaking same. They look the same. They show something going from a small number to a large number, whether it's 1 year, 5 years, 10 years, as far back as you went. This is the way that a growth stock looks. This is why you want to invest for your kids at a young age, because when you do that, you're going to see that it will do this over time. So we're looking at this ETF, and we're going to go back to January of this year. So January of 2020, the stock price for the ETF was $31.73. Okay, that was in January of 2020. The pandemic happened. Stock price had a high of 38. Pandemic made it drop down to 22. Okay. Again, like I said, in all the other charts, anytime something happens pandemic-wise and prices drop, it's your opportunity to buy more shares as it goes down, especially if you're already invested in any stock. So for those who are joining me late, if you're invested in a position prior to the pandemic and your stock price dropped, however, the company that you invested in was a solid company, it wasn't going to go bankrupt, didn't lose its financials, all that happened was COVID, okay? Buy more shares of the stocks that you own. Reason being is that when you do that, you are going to average out your shares at a lower price point, which means that as the stocks rise back to their pre-COVID positions, you're going to make that money the entire way back. So that when you get back to your starting point, you're going to have more money than you started with. period. You're going to make the difference. So let's say you had 10 shares of Tesla. Now, let's say you had 10 shares of this one, Invesco, right? You had 10 shares of Invesco at $31. Okay. The price went up to $38. You bought some more. And let's say your whole portfolio is $38. Okay. Your $38 portfolio, let's say you had 100 shares, was $3,000. Okay. That 3,000 dropped to 2,000. So you lost a third of your portfolio right there. I want you to buy more shares at the $23 price, because if you did, you would have your cost of your average shares would go down. Instead of it being a $31, cost for your shares, it'll drop to, let's say, 25 or 24, somewhere in between, where you originally had your high, where you bought all your shares, and the low, which was at $23. You're going to have an average that's going to be lower than your highest stock. And as long as you have a lower average, let's say it went from $31 down to $25, every dollar above 25 that your share grows past is gains for you. Okay. And right now that stock is worth $92, that ETF. So it went from $31 back in January of this year to $92. Now, again, this seems very like you're just looking at the stocks and you're going back in time and anyone can do this. You're right. Anyone can do this, but what is this company going to do going forward? Right? It's a solar stock. We already told you that the industry for solar tech is going to be a boon in the next 4 years because of the administration that is now taking office in the US. Because of that, we're banking on solar. We're banking on EV. We're banking on, renewable energy. Bank on that because there's going to be incentives for companies to invest deeper into their businesses. There's going to be access. There's going to be people that are going to need to buy these things because, again, the way our economy is moving, we're trying to be carbon efficient. Like, it's just a thing. So I really do strongly believe in the solar market. I do believe in the renewable energy market. I think it's going to be a boon going forward. And for folks who are just joining us right now, go to my bio, click the link up top to our bio so you can see the actual YouTube stream. Last week, Instagram deleted my video. So we're live streaming on both channels. So we're actually showing like the stocks and we're pulling up the portfolios and looking at the charts on our YouTube. So just click on the YouTube. You'll be with me right here. All right. But thanks for joining us. So those are the 5. How much time do we got? We got 8 minutes. So quick review. We're going to recap all 10 stocks. Okay. For everyone who wasn't here with us, you're going to get the quick skinny now. So let's go back from top to bottom. So the 10 stocks for growth in 2021 are as follows. Number 1, JMIA, Jumia. Number 2, JetBlue, JBLU. Number 3, American Express, AXP. Number 4, NIO, NIO. Number 5, Tilray, TLRY. And I got to talk about that in a second. Number 6, Apple, AAPL. Number 7, Tesla, TSLA. Number 8, Sunrun, ticker symbol is RUN. Number 9, Lightspeed, ticker symbol is LSPD. And number 10 is TAN, TAN, and that's Invesco Solar ETF. Those are the 10. And again, there are more than these. Like, this is just the first 10 I decided to talk about that I know are going to be, a pretty good bet going into 2021. And again, the purpose of this is not to tell you how to invest your money, but to show you what I'm looking at. As a person who has invested before, invested professionally, invest currently right now, I look at these things and there's a lot more data that goes into it, but I'm not going to go into the technicals because if I did that, we'd need to spend an entire hour on one stock. Didn't want to do that to y'all. Wanted to give you guys a quick hit so you can see what we're doing. But I'm going to talk about TLRI real quick in this merger. When TLRI merged with Afria, okay, they became the world's largest cannabis company by sales. And that right there is something that we saw coming. When a company is well run, well positioned in an industry that's going to blow up like the cannabis space, you want to get the biggest players in the game because if you do, things like this can happen. And when this happens, that stock price will fly as, again, your access flies. You're getting more access to more customers. You're becoming the largest cannabis sales company. Like, you're doing things and setting yourself up in an industry where a lot of more states are rolling out, friendly cannabis laws. You're going to have more patients, more customers. That's a moneymaker. So for folks who don't know, I need you to start looking into this. And again, add this to your stock symbols on your Apple stocks. Add this and just watch, because I'm gonna tell you right now, See how it's trading even right now? Okay, so for the last 6 months, let me go back to a year. This had a high of 16 bucks, dropped down to $2. Oh my God, I wish I knew about this back then. Back in March, again, pandemic prices, and then now it's at 933. This is going to fly. I can't tell you how fast or how high, but it's going to fly. So for me, I would definitely suggest that you look at TLRY, you look at other cannabis providers, and start buying these stocks when they're $9. Because again, if I do this 10 years from now, and we look back at these 10 stocks, remember, this is on YouTube. I can go and reference this video for the next 40 years if I want to, right? You're going to see these same stocks. You're going to hear the prices. You're going to see the video. We have it all here. Do you want to be that person that saw this stock at 933 and 10 years from now, it's now worth $900 and you didn't buy 100 shares of this or 1,000 shares of this or whatever you want to spend on this? Do you want to be that person? You saw what Apple did. You saw what Tesla did. You saw what every other company on this top 10 has done. Get ahead of it, okay? Because it doesn't stay like this forever, especially in an industry that's growing. So any questions? I think we do have the ability to see questions on here. Can I open up the comment section in the, I think I can open up comments. Does anybody have anything to say? We got 6 folks viewing online, so that's awesome. And that's coming in and out. So again, that number will grow and shrink the entire time, which is great. But yeah, any questions, folks? That is what I have. We got 4 minutes. So any questions? Let me go through this and see if anyone said. Janelle, let's see what you said. BOHR to charge. Oh, bow to charge. Oh, that's charge. Nice. Okay, 2030. All right. So everyone that's joining us, we appreciate you guys for coming through. Again, this was our top 10 for 2021. And again, there's others. However, you know, this is just the top 10 that we have for now. Again, the amount of stocks that are going to be doing amazing in 2021, there's a lot of them. You know, so you pick and choose which ones you want, but just go through the chat. You'll see the ones that we have up here. These are game changers. And like I said, you know, I want you all to be prepared. You know, investing is not an art. It's more of a science. You know, you got to know what to look for. You got to know what looks nice, what makes sense. You have to have an understanding of why it makes sense. And again, back to Tilray, short term, 2 to 6 weeks, it says it's low, which means you need to start buying in around now. Because the middle term and long term approach is both positives. You see that? You want to get stocks. Again, we're not talking about beta. We're not talking about risk. We're not talking about the balance sheets of these companies. We're not talking about how much cash on reserve they have. We're not talking about any of those indicators right now because I can go into that and go ham on that. But that doesn't help you understand the story behind what matters when it comes to this, in my opinion. And I'm a very growth-oriented investor. I like to buy stocks based on the opportunity, because I've seen so many times where the numbers don't look right, but the opportunity looks amazing. And folks miss out because they were so busy, afraid of the balance sheet. Like, granted, the balance sheet can cause a company to fail. Don't get me wrong. But if a company is positioned the right way and the balance sheet looks crazy, I invest there because that's where I'm going to get the best price. Because when the balance sheet looks good and everybody wants to jump on board after the fact, you're a little late to the party. Perfect point in case is JMIA. I bought in at that stock under $2. Now it's $32. And back then, the balance sheet was looking crazy. They had closed down different country locations because they were losing money, hemorrhaging left and right. And they were priming themselves in a pandemic to provide PPE equipment to the government and to people who needed those type of equipments for the pandemic. And they were delivering to people contactless delivery. Like, they were just primed for something like this. And they made a killing. You made killing profit off of that, right? So, folks, I appreciate you guys for joining me. I hope that you guys got something good out of this. If you didn't see it, I'm going to save this live. Hopefully Instagram doesn't jack me up. I'll save this live and you guys can take a look at it after the fact. But again, every Wednesday, I want you to join us on our YouTube channel, join us on Instagram, and we're going to give you these gems. Again, my point for this is to give you access to how I think about investments, about, you know, stocks that are primed for growth, and just other conversations about financial literacy, because we don't talk enough about this in our community, and we need to. This needs to be a conversation as simple at the water cooler as anything else. We've got to talk about this. We got to talk about our emotions, our feelings. We've got to have these conversations in our community because they're not normal. You know, when I was 13, no one told me about stocks. No one told me to invest in anything. They told me to play basketball. So let's tell our 13-year-olds, to watch this video and look up these stocks, add it to their stock watch list, and become knowledgeable about the companies that they can invest in the future to make them a ton of money. All right, so folks, appreciate you all. Revolution Nows, you're welcome. Bev, appreciate you always. And next week, we're going to talk about this COVID vaccine situation, y'all. I need to give you guys some keys on this, and I know that this live is going to cut out soon, so I'll give you a quick teaser for next week. So this COVID vaccine is coming out, and I can't use the word COVID and 19 and vaccine because when you do that, it becomes an indicator. So we're going to say C, V, we're going to call it by its letters, right? So this C situation that has a V coming out, I got a problem with that because according to my research, there's going to be some things that need to be hammered out for me to understand how healthy this is for folks that have chronic illnesses, that have any sort of, underlying health issues, because it's requiring your body to be working at efficient. And something as simple as using high fructose corn syrup, that inhibits your body from utilizing something like a vitamin D, which can actually help your immune system fight a COVID infection. So we're going to talk about that in detail. We're going to go into what the vaccines look like, so the V's look like. We're going to go into why it makes sense to kind of continue to research and read up on it. And, I think that educating us on that is just as important as educating you on stocks. Because again, all of this matters long-term. What good are your stocks if you don't live enough to see it? So let's talk about that next week. All right. And we'll talk about some more stock strategies next week as well. All right. So folks, thank you so much for your time. It's 9:01. I got to go. For those of you who are on Clubhouse, I'm going to be opening up a room at 9:30 in Clubhouse to go over these 10 and just talk about, all of the topics that we discussed today. So if you're not in that app, I'm sorry, got to get invited. Hopefully you are. If you are, join me over there and we can talk about it. All right, folks. So I want to thank you so much for joining us on our live stream. We will be back better than ever next week, Wednesday. So until then, stay tuned. Stay amazing, stay healthy, stay safe, and we'll see you guys next week. All right? Adios, Instagram. Adios, YouTube. We out. Later.